Welcome back to the channel, y'all, or welcome to the channel if it's your first time. My name is Shawn King, and I create educational content around the idea of helping you master your money and create tough money habits. Now, a lot of people out there have money that they're looking to grow safely, or at least with as little risk as possible, to fund their futures and their upcoming retirement, right? Well, today we're going to discuss what do billionaires, Ivy League grads, and Wall Street firms all have in common. Now, you, much like I, might not be any of those three things, but that doesn't mean that you're still not somewhat interested in what a hedge fund actually is. Luckily for you, today I'm going to break it all down in the simplest way possible. Okay guys, just to clear the air, I'm not a financial advisor, and this isn't any kind of personalized financial advice. Cool. Now that we got that out of the way, let's define what a hedge fund is, or a hedgie, to use the proper retail investing lingo. So a hedge fund is a pooled investment fund that uses a variety of different strategies to try and earn high returns for its investors. Now, right off the bat, that sounds nearly identical to other types of funds like mutual funds and index funds. Yes, these are all pooled investment funds, but the similarities, they really end there. Unlike index funds and mutual funds, hedge funds are less regulated, and that gives them more flexibility in terms of what they can actually invest your money in. But that comes with an important caveat. Because of this regulatory ease, we'll call it, these hedge funds are almost always limited to accredited investors only. That's going to be more of your high income, high net worth individuals. Now, in addition to that, most hedge funds have heavy minimum investments that normally can range anywhere from like 100,000 to multiple millions. But why would someone choose to invest in a hedge fund versus other investment options out there? Well, the main reason why these are chosen is for the goal of a positive absolute return. Simply put, a hedge fund aims to make money whether the market goes up or the market goes down. If you invest in most index and mutual funds, well, they're going to go down when the market goes down. Now, through the use of complicated financial instruments, these funds hedge against risk, which is obviously where the name originated. An example of this would be buying one asset, but then shorting another one to protect from potential losses. Today, many don't hedge at all, and instead they focus solely on long-term growth, but hedge funds are still popular, and they likely always will be. It's important to understand hedge funds primarily make money through their fees, and there's a common 2 and 20 fee structure that applies with many of them. With this fee structure, the fund actually collects a 2% annual asset management fee and 20% of the profits generated. Obviously, this is a hefty fee, and it's significantly more than you would pay for an index fund or a mutual fund, for example. However, hedge fund proponents feel that this structure incentivizes the fund managers to perform at their best ability, as their interests are obviously aligned here. Don't get me wrong, hedge funds are far from perfect investment vehicles. In fact, there are several unique risks associated with them. For starters, hedge funds can and often do use leverage, short selling, and derivatives, which can amplify their gains but also their losses. In addition, looser regulations means that investors need to perform stricter due diligence, and of course, you also have to trust the fund manager. You guys remember the scene from The Big Short when everybody is upset with Michael Burr?
If they trust me, and they trust me,
no one trusts you. No one.
That's exactly what we're talking about here. The Michael Burr hedge fund story turned out to be good, obviously, but one that didn't is the Bernie Madoff story. This individual ran the world's largest unregistered hedge fund, and it was and still is one of the biggest financial crimes in history. Simply put, hedge funds take "trust me, bro" to a whole new level. Ultimately, this might be leaving you thinking, why should I even care about this? Even though most normal everyday people will never invest into a hedge fund, they still have the potential to influence your day-to-day life. Hedge funds influence markets, politics, and even job trends in the world of finance. If you're an investor, then learning about them gives you a deeper understanding about how the financial world really works. Or It could be just good trivial knowledge to have in your back pocket at some party that you're at, if you feel like boring the crap out of somebody. Either way, if you feel like you got some value out of this video, please make sure to smash that like button and don't forget to subscribe for more educational tips. If you want to know where I believe the absolute best place is to save my money so it's always working for me, making me money, whether I take it out and spend it or not, then check out the video in the description below. As always, guys, the information is free, but the knowledge is priceless. My name is Shawn King, and I'll catch you next time.